Zero commissions, free stocks, investing for everyone. Robinhood changed the game. But what if the unthinkable happened? What happens if Robinhood goes bankrupt? It happened to giants like Lehman Brothers, MF Global, and FTX. Could your favorite brokerage be next? And crucially, is your money actually safe? Stick around. In the next 8 minutes, we're diving deep into the nightmare scenario, Robinhood bankruptcy. We'll break down what really happens to your stocks and cash, the hidden risks most users ignore, and the critical steps you must take right now to protect your portfolio, no matter what happens. This isn't fearmongering, it's financial self-defense. First, let's be clear, Robinhood isn't on the brink today. But understanding why bankruptcy is a plausible risk is key. Robinhood's business model relies heavily on two volatile pillars. Payment for order flow, Robinhood's main cash cow. They make money by routing your stock trades to market makers. The more you trade, the more they earn. But in a prolonged bear market, volume dries up, and so does this income. They also make money from Robinhood Gold subscriptions and margin interest. But in a downturn, people cancel subscriptions fast. And margin trading? It works until it doesn't. Margin calls pile up, and Robinhood has to cover the risk. And we've already seen how fragile that setup can be. Remember the meme stock frenzy?
Trading app Robinhood blocked traders from buying the retailer's stock.
To buy shares of those stocks in limited quantity, but many are still outraged.
Call themselves Robinhood, which, I mean, take from the rich and give to the poor. They did the exact opposite there.
I'm not a cat. I am not an institutional investor.
Robinhood had to raise $3 billion overnight just to keep operating when meme stocks spiked. That was a warning shot. Add lawsuits, fines, or a crypto meltdown. The storm could come fast. They aren't too big to fail like JP Morgan. A perfect storm could sink them. So, how safe is your money, really? Let's walk through what happens, step by step, if Robinhood files for bankruptcy tomorrow. First comes panic. The app freezes. Trading halts. Your portfolio is locked. Now what? A court-appointed trustee takes control. Your first emotion? Terror. Your first action? Nothing you can do immediately. But that's just the surface. The real nightmare begins when the trustee tries to figure out where your assets actually are. Robinhood should hold your stocks and cash in segregated accounts, separate from their own operating funds. But history shows this doesn't always happen perfectly. Look at MF Global. Customer funds went missing.
I simply do not know where the money is or why the accounts have not been reconciled today.
The trustee has to find and verify all customer assets. This takes time, potentially months or years. Eventually, if your assets can be found and verified, you may get everything back. But if there's anything missing, that's when SIPC steps in. But don't relax just yet. Their protection isn't as broad as most people think. If your stocks or ETFs are missing and can't be recovered, SIPC provides up to $500,000 in protection per customer. They'll compensate you with the cash value based on the date the brokerage failed. Cash sitting in your account waiting to invest? Or proceeds just from a sale? This is the riskiest moment. It might be commingled or in transit and harder to recover quickly. SIPC only covers the cash portion up to $250,000. Crypto. This is the major risk most miss. SIPC does not cover cryptocurrency. If Robinhood goes under, your Bitcoin, Ethereum, Doge, they are likely treated as general assets of the bankrupt estate. You become an unsecured creditor, fighting with other creditors for scraps. Recovery could be pennies on the dollar, or zero. But wait, there's a new risk emerging, especially for Robinhood users in Europe: stock tokens. Robinhood has started offering tokenized versions of US-listed stocks and ETFs to its European users, and even exposure to private companies like OpenAI and SpaceX. On the surface, this sounds like regular stock ownership, right? Wrong. So, just like your Bitcoin, if Robinhood went bankrupt, these stock tokens are likely not covered by SIPC. You'd be an unsecured creditor, and recovery could be minimal or non-existent. This is a subtle but incredibly dangerous trap for those unaware of the underlying structure. Even if you're covered with SIPC, this doesn't get resolved overnight. The process of verifying balances and dealing with court filings takes time. Your funds and stocks are frozen for weeks, months, maybe even years depending on the complexity. Meanwhile, you're stuck. Scary? Absolutely. But knowledge is power. Here's exactly how to bulletproof your finances, whether you use Robinhood or any broker. Diversify brokers. Don't keep all your eggs in one basket, especially cash. Split your portfolio between 2 to 3 reputable, established brokers. Think Fidelity, Schwab, Vanguard. Ensure total cash at any one broker stays under the SIPC cash limit, $250,000. Get your crypto off exchanges and brokers. If you hold crypto on Robinhood, move it. Transfer it to a private, non-custodial wallet where you control the private keys. Minimize cash sitting idle. Don't leave large sums of uninvested cash in your brokerage account. Sweep it into SIPC-protected money market funds within the account, or transfer excess cash back to your FDIC-insured bank account. Verify SIPC coverage and understand limits. Check Robinhood's or your broker's SIPC membership is current. Calculate does your total exposure, stocks plus cash. Is it under $500,000, $250,000 cash max? If not, diversify brokers ASAP. Keep impeccable records. Regularly download statements and trade confirmations. Having your own records is crucial if the broker's systems go dark. These aren't drastic measures, they're basic financial hygiene. They cost little time and give you immense peace of mind. So, will Robinhood go bankrupt tomorrow? Probably not. But could it happen eventually in a severe enough crisis? Absolutely. The financial system is interconnected and fragile.